Hello, everyone. So great to see you all on the webinar today. I am so excited about this webinar. This is my baby. This is my master proprietary process we're going to talk about tonight. This is how I structure portfolios. This is how we stand out different from the crowd, from other financial firms, because they just don't do everything that we do. So I'm just so excited to explain this to you. If you have questions, please put them in the chat. If I don't get to your question by the end of the webinar tonight, then I will get back to you and answer your question directly. But I'm really looking forward to this. I just love my master proprietary process. I think it's so important for people to understand how investments work really and what you can do with your portfolio and your entire financial life for that matter. So let's get started here. Before I get started, yes, I am Kelly Slott. I am the owner and CEO, founder of California Wealth Advisors, and we are, again, very proud of what we bring to the table for you. We, again, feel like we stand out from the crowd in what we do. So, building foundations for financial wealth. I do these specific webinars every quarter, and I have a different topic I talk about each quarter. So again, this is a deep dive into our master proprietary process, our investment strategy that we use here. So let's go to the first slide here. So I am, again, Kelly Slott. I do have a radio show. Many of you found me with the radio show. KNX 1070 is my radio show. It plays from 7 to 8 a.m. on Saturdays. You can listen to any and all of my 4+ years, I think, of radio shows on my website, californiawealthadvisors.com. And I have my byline as where there's always something to be bullish about, because there's always solutions to the issues that you might have in your particular portfolio. So there's always a positive note to be had, I believe, in your investment life. I did write a book, The Great Retirement Mystery, How to Avoid the 6 Biggest Blunders. Those big blunders are true for anyone and everyone, whether you're 20 years old or 80 years old or anywhere in between. That's important for anyone and everyone. So what's one of my blunders? Well, who are you listening to? Are you listening to someone that's very qualified in the financial field, giving you the correct financial advice? Or are you listening to your brother's best friend? That probably doesn't know your total financial picture. So make sure you're listening to someone that actually really knows what they're talking about and has the creds really to help you. So part of my overall financial direction that I bring to people is looking at their entire financial house, their whole financial situation, not just their investment dollars. And that's, of course, very important. And that's what our master proprietary process will talk about tonight. But I wanted to start here with our private client process, because I think this is important for so many people that need help in even a wider array than their investments. So this is a pictorial of it. I'm going to stop share because I'm going to draw here on my screen, because I think it's important to have everybody really understand what I do and how I do it. Again, this makes us stand out from the crowd. I've never seen another financial advisor do what I'm going to explain to you here. So I'm going to start here with my whiteboard. So I position myself as your financial director in your entire financial house. So yes, your investment dollars is this part up here. And that's important. And again, that's what we're going to talk about with our master proprietary process. But we have so much more to our financial life than just our investment dollars. So what am I talking about here? Well, this is your entire financial house. And excuse me, I'm not an artist. I'm a financial person, not an artist. But we're going to talk about here first risk. What kind of risk do you have in your overall financial house? So what I believe is risk is taxes. What kind of taxes are you paying? Are you paying too much in taxes? I think that's important, because if you're paying too much in taxes because you sold your business and you paid the taxes, or you sold Apple stock that you bought put $10,000 in and it's now worth $2 million. That's a big gain. So did you just pay the taxes, or did we do something to help you avoid some of those taxes? Because the more money you can put in your pocket, I believe, is better for you, is better for your whole financial house. So what taxes are you paying? And we have a number of different programs that we help people with avoid taxes, avoid or delay taxes. So taxes are important. We're looking at your insurances, your property and casualty, your homeowners, your umbrella policies. These are very important for your rental properties if you have those. What kind of insurances do you have for all of that? I also look at the titling of your assets. That's a risk if you can be sued because you don't have your assets titled correctly, again, trusts or LLCs, then that's not good for your overall financial house either. We also are going to look here at Social Security, when to take it, when's the best time to take it for you and perhaps your spouse or your partner. So there's a lot of risk that goes on in financial houses, if you will. So these are just a few, but we're going to look at that for you in our private client process. Then we're going to look down here at your estate planning documents, ESTAT, if I can spell, estate planning. So what estate planning documents do you have? I just had a seminar with an estate planning attorney and a tax attorney, actually. We did a roundtable, and we talked about estate planning specifically, and even my high net worth clients, my very high net worth clients come to me a lot of times and they don't have the correct estate planning documents. They don't have the correct trust. They set up their trust 20 years ago and they've never looked at it since. And the reason I want you to look at your estate planning documents, really update them every couple of years, is because tax laws change. Where you want your assets to go changes. Maybe you have a new grandchild, maybe a divorce happened, maybe a marriage happened. So estate planning documents are very important. The other thing that's really critical for everyone, I think, is to have powers of attorney and medical directives in your estate planning documents. So if you're driving down the road and you hit a tree and you're in the hospital for 6 months, who has the power of attorney to pay your bills for you, to make medical decisions for you? Are these fun things to think about? No, but I think it's incredibly important to do it. So your estate planning documents are oh so important. And then of course the titling down here is important too. Again, on rental properties or your businesses, do you have them titled correctly? And then a lot of times we look at LLCs for that, or maybe we put it in the name of the trust. But again, I want these things to be thought about. And this has nothing to do with your investment dollars, but is also important for your overall financial house. Again, this is why I do my private client process, which is what I call this, for folks, because it's just imperative that you take care of this. Then we go over here and we have what's called the vault or the family office. This is where we put all of your important documents in one place. So if you should have something happen to you and your children don't know who to call, what to do, because you're in the hospital and they don't have your trust and they don't have your access to your dollars to pay your medical bills or whatever, it's going to be over here in the vault. So the vault is where I put passports as well. I have many of my clients love to travel. So they give me a copy of their passport, and if they're in a foreign country and they get pickpocketed, they're not stuck in that country for 2 weeks trying to get out of that country. They can call us and we can send them a copy of their passport. And believe me, it saves a lot of time and hassle when we have this all in your vault for you. We put your passport, we put your driver's license, we put your trust documents, we put your investment dollars. Many times clients also put their bank accounts in here as well. We put all of your insurances too, your car insurance, your homeowners, all of that goes in here into the vault, because I want to make sure everything's in one place for you if something should happen to you. And believe me, it gives you peace of mind to know my children know to call Kelly, to call California Wealth Advisors if something should happen to me. I have many families come and chat with me. And when I talk about this, especially for the kids that are in the room, if they can be adult kids, they're so comforted to know that, hey, if something should happen to my parents, I know where to go. I know how to take care of them. And then the investment dollars here, again, that's what we're going to talk about here with our master proprietary process. But really, it doesn't matter if you've got $1 million here or $100 million here in your investment dollars. If you haven't taken care of all of this, this is going to go away. You could be sued. You could go through probate here for your heirs. let's make sure we have this covered for you. So I take the time to explain this because it's just really paramount to everyone, I think, that I talk to set up something like this. So I do charge an extra fee for this. This is not part of the investment management dollars that we do, but I think it's very important. So make sure that you've got these things covered for yourself. Okay, enough of that. Let's move on to the master proprietary process. I think this is going to be so fun. Again, this is my baby. This is how I started in the industry, creating diversified portfolios, but also to make us stand out a little bit different than other advisory firms. Because again, no other advisory firm that I know of does what we do. And I think that's to your benefit, really. So what are the key components to investing? Well, you got to have a plan. Just because you have those investment dollars, a large 401k, a large IRA, a large trust account, maybe rental properties, maybe you have multi-millions in those areas. That's fantastic. But a lot of times I just see people have these assets, but there's no plan for any of this. There's no strategy set up for you for any of these dollars. So let's create a plan that's specific to you. There's no cookie cutter here whatsoever. We tailor make portfolios for you. And then I want you to have diversification. That's where my mass proprietary process comes in. M is the market, A is alternative investments, S is safe money. So let's make sure you're properly diversified based on you, your needs, your wants, your desires, your time frame, your risk tolerance. All these things I take into account when I sit and chat with you. So let's make sure this is taken care of for you. So what is the mass proprietary process? Well, here's a pictorial of it as well. I'm very visual, so I like to have pictorials to show you all. So the master proprietary process, again, M is the market. Stocks, bonds, mutual funds. That is red for a reason. It's going to go up and down. Most of my retirees or pre-retirees don't want to have 100% of their assets in the markets. And if you have a large 401k or IRA, or even a trust account, many times I see people have stocks, bonds, and mutual funds only. I just realized mutual funds is not spelled correctly. Sorry about that. So let's make sure not all of your money is in the market. Now, do I like some money there? Yes, and I'll do a deep dive in that in a minute. A is alternatives, private placements, real estate, gold and silver is over there, oil and gas, anything that does not travel with the stock market. I like that for part of your portfolio as well. And then we look at safe money. If you come to me and you say, hey, Kelly, I just want to have the safest thing I can do. I don't want any risk. I don't want to be in the market. I don't want real estate. I just want to be safe. I want to have insured products. Well, we're going to go down to safe money. That's cash. That's CDs, annuities, which I'll get into in a minute. Life insurance and long-term care. Those are all insured products backed by insurance companies. So that's the safest thing I can do for you. Okay. Let's get into what each one of these individually is. So M is the market. So again, stocks, bonds, mutual funds. Yes, the value will go up and down. We've seen that a lot lately. I was around, and my first foray into the markets was 1988 when the market went way down, 1987, 88. Certainly the dot-com in the early 2000s, 2008, everybody got hit. 2022, 2023 wasn't a great year either. And who knows what's going to happen now. But markets go up and down. Now, markets are great if you buy something and you hold it for 10 or 20 years. Historically, you've done very well. But you've got to be patient, right? You've got to weather the ups and downs in the market. So long-term investments in the stock market, I think, is better. Now, again, I do money in the stock market, in the stocks, bonds, and mutual fund section because it is liquid. If you ever had $1 million account with me and you said, I need $100,000 tomorrow, I can go to the M part, stocks, bonds, and mutual funds. I can liquidate that in a day, send you a check in a week. Okay, that's great. That's liquid. It's going to be volatile though. Expect that. I mean, look at my chart at the bottom here. It's going to be volatile. You've got to weather that. And whenever I do investments in the stock market, these are not 1 month, 2 month, 6 month investments. These are 2-year investments, 5-year investments, 10-year investments. You've got to be patient and let the process happen. So if the market goes down, it's probably a good buying opportunity because I've probably chosen, hopefully, good investments for you. that are going to hold their value and long-term be very good for you. But you've got to weather the downturns, okay? So just be patient. That's all I'm saying here with things that I put in the stock market for you. Okay, so that's the M part. I think it's important to people to understand risk. So when you're in the stock market, is there risk? Yes. I mean, look at my chart here. If you buy something at a high and it goes down, the risk is, well, the price is lower if you then sell it. But if you keep it for long periods of time, which my chart actually shows here, it's going to be fine for you in the long run. Then that's a historical record. That's not a guarantee, right? When I talk about guaranteed, that's the S part. That's the safe money that I'll talk about in a minute. So you need to be patient. A lot of times I go with stocks these days and mutual funds these days that are high income. And a lot of them are paying 8, 9, 10%. That's liquid. We're not tied in for any length of time. I have many that keep their value fairly even, I would say, over the last 5 or 10 years, and I can show you charts on that. So I use the stock market to create more income. Now, I'm not doing bonds these days. Now, remember, I started the business in 1982, and I did a lot of tax-free bonds in those days, 9%, 20-year bonds. My clients loved them. Can't get that today. And with interest rates fluctuating and everything, if interest rates go up, values of bonds go down. So I don't really want to have that in a portfolio right now. So I look to the stock portfolios that I have, the stock and mutual fund positions that I have that are paying 8 to 10%. I like that yield. It's liquid. We can sell it tomorrow if we don't like it anymore. So a lot of times that's where I go for income and liquidity, and then growth too. A lot of clients these days are asking me for growth. So I prefer to do U.S. dividend paying stocks. They tend to be a little more even as far as ups and downs go. But I do have quite a few clients too that like growth. They want to take risks. So we maybe are looking at AI or tech stocks or something like that. But again, it can be volatile, certainly. So the master proprietary process, the M, the markets, I think is important for part of a portfolio. Now, how much you put in there is going to be different than maybe someone else, because maybe your risk tolerance is more or less than someone else. So again, this is the tailor making I do to make sure you have the correct dollar amount in each one of these sections for yourself. Okay, let's talk about A. Let's talk about the alternative investments. Again, these are very, very important. Different than the stock market. They do not go up and down with the stock market. They're not going to fluctuate. If the stock market goes down 1,000 points in a day, whatever we have in, let's say, real estate is not going to go down the same. It's just not. It doesn't trade with that. Often I can create income and growth out of this portfolio, out of these types of investments as well. So many times let's just take real estate as an example. The real estate programs are going to pay maybe 5, 6, 7% in income. That's rent from the properties. You're also going to have growth on top of that when the real estate grows over time, and then the multi-billion-dollar company that we're working with decides to sell the properties. And there's apartment buildings that we do. There's storage units that we do, industrial warehouse space. Those are the ones that I like these days, and housing programs as well. I'm not doing any retail. I'm not doing any hotels at the moment. Office space, no. So I'm very careful about which program I'm going to show to you. And, we probably have 20, 50 different programs on our platform at any one time. But I'm going to pick the best 5 in my view. And this is why I travel a lot. I go to the CEOs that run these multi-billion-dollar groups of real estate and get to know them. And even the oil and gas folks, I get to know them as well. So I want to bring to the table some intimate knowledge on a product and the CEO and how he runs things, how their performance has been in the past, which is, of course, not a guarantee. But if it's a 20, 40, 60-year-old company, it's a pretty good track record, usually, that I find. And so those are the programs I'm going to show you. So again, they often create income and growth. I have oil and gas programs that are paying around 10% these days, and that's federally tax-free. So again, not a guarantee for any of this, because the only guarantees are insured products, which I'll talk about next. But again, I look at track records. So a good thing and a bad thing about the alternative space is it's not traded. It's illiquid. And actually, I think that's good because that means it's not going up and down with the stock market. Something that's liquid is going to go up and down with the stock market. Something that's not liquid is not. It's going to probably keep its value fairly steady. Generally, I see these are 4 to 7 years in length. I've seen some go full cycle in a year and a half. I've seen some go full cycle later than that. But generally around 4 to 7 years, I would say. So you're not deciding which properties to buy. You're not managing the properties. I also do 1031 exchanges. Now, you do have to be a client of ours and an accredited investor to work with us for those. But that's in the real estate realm as well. So if you have a rental property and you want to sell it, I can help with that. We do have 1031 exchange properties on our platform that are available to you. And again, if you don't want to manage it, you want to sell your property, you've made a lot of money, but you still want the income, that's when people come to me for 1031 exchanges. So again, you have to be a client of ours to work with us for those. So the alternative space, I think, is fabulous. I love it. I've used it for many, many years. I think it's very beneficial for clients to have some of their portfolio that's not going up and down with the stock market. And then again, a lot of them create nice income streams for you as well. So I love the alternative space. Is it right for you? I don't know. You need to sit down with me. Let's create a strategy specific to you to go over that. So I hope that was good for you. Let's go to safe investments. So safe investments, that's when you say, hey, Kelly, I don't want to lose any money. I want to have an insured product backed by an insurance company, FDIC insured, perhaps, if you're doing cash or CDs or something like that. Let's make sure I don't lose this. Okay, so life insurance, long-term care, annuities, those are issued by issuing insurance companies, backed by the insurance companies. And most of the insurance companies, I'll be honest with you, that we work with are been in business 100 years. I mean, they're not new. They've been around a very long time. You can create growth and income off of the annuity, and I'll go into annuities more specifically in a minute. But you can create growth and income, and it can be generated for your life and or your spouse's life. I think that's very comforting for a lot of folks. I had a client of mine last year. He retired from a big oil company, and he got a big pension payment. And he said, you know, these funds, I want to have income generated for me and my wife for the rest of our lives. So we took that and we did that for him. And they're very happy with that. Now, they have lots of other assets too, but for that particular asset, that's what they wanted. And it was great. Now, for annuities, you can withdraw 10% for free every year. So let's take an example. You have $100,000, you put it into an annuity. A year later, you can take out $10,000 or 10% from that annuity. So that's nice. So they offer some kind of liquidity if you're looking for that. That's not necessarily why we buy them. We do it for the income and the growth and the downside protection that they can create. But that is offered for most all of the annuities we look at. It's a nice legacy passing tool as well. So I'll give you an example. You put in $100,000 into an annuity. The value won't go down because, again, it's backed by an insurance company. And let's say it grew to $150,000 and then you passed away. Well, your heirs would inherit the original amount, the $100,000, tax-free, and then the $50,000 would be taxable to your estate. So it's a nice legacy passing tool as well. I have many of my high net worth clients, they put $1 million in and they leave one of their children as a beneficiary. And so that $1 million will get passed to that child tax-free. So that's a nice legacy passing tool as well. So a lot of good things can be had here in the safe investment side. Again, I like it for part of a portfolio. Do I do all of it? No. But I do like it for part of a portfolio to make sure, because I do have a crystal ball behind me, but she doesn't always tell me what's going on with the market. So I want to make sure you're properly diversified. You've got some downside protection in your portfolio. You've got some growth. You've got some income, maybe tax advantages as well. So let's make sure this is right for you. So I'm going to go over annuities specifically here because so many people are so confused and they just don't understand annuities. So there's 3 kinds of annuities. There's a fixed indexed, and a variable. Those are the 3 kinds. And unfortunately, I will say most advisors don't know how to explain these correctly. So I came up with this chart. I think that's very helpful. So a fixed annuity is like a CD. You put your money in, you have a period of time, it stays in there, you have a certain stated rate of return, it matures at a certain date, you're done, that's it. That's the blue line there, very steady. Not exciting, but very steady. Then you have a variable annuity. That's the red line there. That's going to go up and down. What do they buy in variable annuities? They buy mutual funds. So of course, it's in the market. It's going to go up and down. So as you can see, the red line, it goes from 100,000 all the way up to, what is that, about 185,000 or so over time. But you have to let them grow. As I said earlier, you have to let these investments grow for you. But look at the ups and downs you had the whole way along there. So you've got to be able to weather that. So variable annuities can be fine. Again, they buy mutual funds. Be careful with how much you're paying for these variable annuities. I had a client come to me a number of years ago, and she had put 800,000 into a variable annuity about 10 years prior to meeting me. And she said, well, I love this variable annuity. They guaranteed me 5% a year. That's what their guaranteed is. And I think that's just great. And, this was about 6 years ago, and 5% was pretty good. So I said, okay, great. Well, what are you paying for this annuity? She said, oh, I don't have any idea. I said, okay, well, bring me a statement and let me look at it. So I look at her statement and I said, well, you don't know what your advisor is making you? I said, you think you've seen this grow by 5% a year? She said, no, actually, I've only seen it grow by 1%, but they guaranteed me it was 5%. So I realized, well, they were charging her 4% a year to manage this variable annuity for her. They guaranteed her 5%, so she was only making 1% a year. And I said, your advisor loves this. He's making a fortune off of this. So we took care of her and we lowered her fee by quite a bit. And now she's much happier. So make sure you know what you're paying for any investment you have, variable annuities too, but any investment that you have. Make sure it's something you're willing to pay. 4% to me is way too high. So that's a variable annuity. Then what I do mostly, I will say, is the green line. That's a fixed indexed annuity. And as you can see, that green line never goes down. You're guaranteed downside protection, again, backed by insurance companies. So it will only go up with the markets. If the market goes down, you're going to be flat. You're not going to make any money, but you're not going to lose any money. And then when the market goes up again, that's where you're going to start to make money again. So I would say generally 4 to 9% a year is what I see in growth out of those. You, again, can create income streams guaranteed for your life, and they can be increasing. So it's an inflation hedge too, if I build that into the illustration. Wonderful. I love that. Again, let me ask everybody out there. I do this on my radio show all the time. What are you doing to combat inflation? You have to have inflation hedges built into your portfolio. So if you have an old annuity and it's not performing, it might have high fees to it. It might have a cap, which means you can only make over 2 or 3% usually. Even if the market goes up 10%, you're only going to make 2 or 3. I see a lot of those out there, unfortunately. I personally never do caps. I don't like caps. I want you to make as much as you can out of these investments. So let's make sure you've got the right annuity. So if you have an annuity and it hasn't performed well, or you want me to look at it, I can do a deep dive and maybe come up with something better for you. Same thing with life insurance. A lot of times life insurance policies that I see were bought 5 or 10 years ago or more, and there's no long-term care attached to it. And usually when you get closer to retirement, pre-retirement, or in retirement, you kind of start thinking about long-term care. You want to have that as part of your investments if you can. So if you have an old life insurance policy, which again is considered one of the safest things you can do because again, it's backed by an insurance company, you might want to add long-term care to it if you don't have it. And I can do that for you. So again, that's just bringing us a statement and letting us look at what you have to make sure we can improve it for you, or let's see if we can improve it for you. And of course, with life insurance policies, you have death benefits that are tax-free to your heirs. So again, another legacy passing tool here that I do really like for folks as well. So a lot of times we can lower your premium, increase your benefits, add long-term care, maybe lower your fees, a lot of things we can do with the annuities and the life insurances that you have. So again, very important to make sure you know what you have. Okay, some benefits of the fixed indexed annuities or all annuities, a lot of annuities is transform that savings. A lot of times people come to me, they have a lot in savings, they have a lot in cash. That's not keeping up with inflation, in my opinion. That's not growing for you, certainly, especially if it's in the bank. I had a client recently bring me a statement from her bank, and it showed 0.02% is what she was making. I said, okay, this is ridiculous. We can certainly in our money market accounts, we can get you 4 or 5%. So again, growth potential, protection of principal, income that can be guaranteed, tax deferred growth. If you don't take money out of the annuities, you leave it in there and it's going to grow for you tax deferred. There's no taxes on it while it's growing. I used to do a lot of laddered bonds back in the day. So a bond replacement can be good. Lots of options to be offered here, and predictable income tends to make my clients happier. They tend to like that know that they're going to get a certain dollar amount every month from part of their investment portfolio. Okay, so where are you? If you're new to me and you haven't met with me, I like that first meeting to be in person. I want to shake your hand. I want to look at you in the eye. I want us to get to know each other. I want to establish a relationship with you. I want to make sure I can bring to the table what you're looking for. And that's part of me gathering information from you. I'll ask you a lot of questions. You are certainly free to ask me questions as well. I'm going to evaluate and analyze what you tell me. I'm going to come up with some presentation for you to say, hey, you're very heavy into the stock market. Let's move some money around. Or you're heavy into real estate, maybe we want to give you some insured products. So depending on your needs, your wants, your desires, I'm going to develop and present my recommendations to you. And then if we agree to go forward, we'll implement the plan. We'll monitor regularly. And I can't tell you how many people come to me and they say, my advisor doesn't call me. They don't meet with me. They won't call me. I don't know what's going on with my portfolio. That's tragic in my view. I've trained my staff to be very good at calling people back within a short period of time, at least calling them back and telling them we're working on something. And so that's important to me to make sure we're taking care of you, because it really is all about you. It's not about us. It's about you and you getting out of your portfolio really what you're looking for. So again, this is, where are you? Are you high risk with stocks, mutual funds, and even variable annuities? Because that, of course, can go up and down with the market. Are you low risk and you have a lot in cash? And maybe that's not a wise idea. So where are you on the spectrum here? And is that appropriate for where your risk tolerance, your time frame, all of that is now? What I see a lot of times is people come to me pre-retirement or even in retirement, and they're all in the stock market. They don't realize it. They say, oh, well, my advisor tells me I'm diversified. I have stocks, bonds, and mutual funds. Well, no, you're not. Especially when we're looking at the mass proprietary process, right? There's alternative investments and there's safe investments you can do. You don't have to have all of that in the stock market, because to me, that's a lot of risk. So let's just figure out where you're at and how we might be able to help you. Now, I came up with these sheets, and these are on my website, CaliforniaWealthAdvisors.com. The budget sheet, I think, is very important for you to know where your dollars go every month. And even my high net worth clients, a lot of times tell me, well, I don't know how much I spend. Well, when you get closer to retirement, it's very important to know how much you spend. And if it's $10,000 or $100,000 a month, it doesn't matter. I just need to know what the number is, because I want to make sure we're covering that for you. We're creating all of that from your portfolio for you. So the budget sheet, I think, is very, very important for a lot of folks. The asset sheet, to get all your assets into one place so you know where they are, and then I can see where they're at as well. And then the bucket list. This is so important. If you have not thought about what you're going to do when you retire, I'm giving you some suggestion here. Go on a safari, drive a race car, lots of fun things on there. Come up with your own ideas, whatever it is that's going to make you happy. That's a hobby. Maybe you want to mentor. There's lots of different things you can do. I had a client come to me last year, and he started his company 30 years ago, and he started with nothing. So zero cost basis. And he's selling his business. He's going to get a check pretty soon now for $40 million. So he's going to have to pay taxes on $40 million unless he does something. So we're working on a number of tax write-off, tax coverage, tax advantage types of programs for him. There's opportunity zones. There's oil and gas tax write-off programs. There's different kinds of trusts we're going to set up for him. So there's a number of things we're going to do to avoid and delay taxes for him. But I looked at him and I said, well, okay, you've been working since you were 16 and now you're 65. What have you thought about doing once you retire? And I'm not kidding. His eyes got so big and he said, I've never had anybody ask me that. I have no idea what I'm going to do, because he's selling his business, taking a check, and he's done. So he's not going to be working there anymore. I said, well, we need to think about what you're going to do once you stop working. So it really was important for him to really think about that. And I know many of you on here have great hobbies, golf. I know that's one of my passions. Whatever your hobby is, that's fantastic. But if you have worked all these years and you haven't thought about it, or think about what you're going to do with your spouse or your partner, I think that's important too. So that's why I came up with the bucket list there. Excuse me. I hope that's really helpful. Okay, we work with a number of different areas here: 401ks, in-service transfers, rollovers, opening a brokerage window. 401ks, we work with quite a lot. Trust accounts, certainly, we work with quite a lot. Annuities, as I mentioned, old life insurance policies, upgrading those, and we will look at Social Security as well. We are a fiduciary. We always have been. We always will be. That means putting your needs before anyone else's. Of course, that's incredibly important to us. So we're very proud of being a fiduciary. And we're also very proud of having an A+ rating at the Better Business Bureau. So we're happy about that too. So we do complimentary services for our clients, constant portfolio reviews. We want you to know what's going on with the markets and your particular portfolio. And every client's different with that, I will say. Some clients like it once a month. Some clients like it once a year. Everybody's different. But we will be reactive and responsive to you based on your needs. Roth conversions. I was just talking to one of my clients yesterday about doing a Roth conversion for him. So that's taking money from a 401k or an IRA and transferring it to a Roth. Now, why would we do that? Because whatever we take out of the Roth, once the dollars are in there, is tax-free. So that might be a strategy we might work. Debt management, cash flow projections. We do a lot of cash flow projections for folks, especially when you get closer to retirement. People want to know what kind of income they can create off of their portfolio. Emergency funds, you need to have, in my view, 6 months of your budget, which is why I ask you what your budget is. Have 6 months of that in a cash type of account that's there for you if you ever need it in an emergency. And of course, we specialize in retirement planning. We do that quite a lot. Providing 1099s, K-1s, other tax documents, we do that every year as well. Required minimum distributions, that's important for folks that are in retirement that are over age 73 that need to take out certain amounts each year. Planning your budget, certainly, and we're constantly doing seminars and educational events for folks because we love doing that. And we hope this is very helpful to you that we're doing here today. So my events page, please go to that on California Wealth Advisors. That will show you here how to sign up. And our future events, I mean, we have so many different events. We have them on real estate. We have them on tax advantaged programs. We have them on annuities a lot of times. We have them on the stock market as well. So we have a number of different things we do all year long. So please check back to that to let you know when our next seminar is coming up. Again, if you're new to me, I prefer the first meeting to be in person. I want to shake your hand. I want to get to know you. I want to make sure I can bring to the table what you're looking for. We can do Zoom meetings as well and phone calls, and we do those quite a lot for our clients as well. But by all means, give us a call if that's of interest to you. So again, thank you for joining us this evening. Again, if you put in any questions, I felt like I either answered them or I'll get back to you. But we certainly appreciate you listening to these. By all means, tell your families and friends of any kind of future webinars we might be having that might be of interest to them. That's how we grow our business. Listen to my radio show. It's always fun. Saturday mornings, KNX 1070 is where we go for that. Or my old previous radio shows are on my website, CaliforniaWealthAdvisors.com. So again, thank you very much for listening. Really appreciate it. Hope you got a lot out of this. I love talking about my mass proprietary process. That is my baby. So again, thank you for joining us, and we will see you soon.